Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. Today I am bringing to you another very important topic, that is bank reconciliation statement. This statement is required to be prepared by accountants in each company on monthly basis. Cash and bank is a very sensitive area of the business. All the receipts and payments must be reconciled each month to ensure the accuracy and reliability of the business records. At the end of this video, we will also review some unprofessional practices of accountants in order to reconcile their bank balance. What is bank reconciliation statement? It is a statement that explains the differences between the balances as of the bank statement and the cash book. Here, bank statement is referred to statement of account from the bank, and the cash book is referred to the bank GL that the in-house accountant is maintaining. The purpose of making bank reconciliation statement is to detect the errors and to correct that errors. What are the major type of errors that we can go through during our bank reconciliation? The first of all is deposits in transits. These could be the checks or the remittance instruction from our customers we have received. We recorded in our accounting system, but in the bank till now we did not receive these payments. So this is one thing, and the other is checks not presented by suppliers. We have issued some checks to our suppliers. Their maturity date come and we recorded in this month as a payment in our bank general ledger, but till now the supplier did not present this check to the bank. Errors of omissions or mistakes. Errors of omission means something we forget to record, or the mistakes, something, a transaction, a payment or receipt. A payment we received as $525, but we have recorded is by mistake $505, so $20 less we recorded, so this is a mistake. So like this, errors of omission and or mistakes, this during our reconciliation we can find these issues also. Then customers check bounce. So we have deposited one check from our customer to our bank statement, bank account. So that check is bounced. So we will not be notified until we get our statement from the bank. So and that's why when we are going to at the end of the month, when we are going to reconcile, we see that in the bank statement this check is bounced and we did not pass the check bounce entry. So this also could be a reconciliation item. Then bank charges or interest income. We have received any profit from the bank, and bank credited our account, or bank deducted some charges, service charges, and we did not record this, so we have to record this during our reconciliation. After matching the bank statement, we can find it. Now we will see the steps involved in making bank reconciliation statement. First of all, get the copies of the bank statement and the cash book. Then secondly, tick all the matching transactions. Then prepare the bank reconciliation statement. At fourth step, go and adjust or record all the transactions not matching, other than the deposits in transits and unpresented checks from the suppliers, as these checks you can find in the next month. It will come to the statement. If it is not coming to the last month, and definitely it will come to the next month. Then prepare the adjusted bank reconciliation statement, print it and keep it as a reference for next month bank reconciliation statement, as well as for the audit purpose. Because when you are going to prepare the next month bank reconciliation statement, there you will find these unpresented checks and the deposits in transit you will find there, but you will not record it again because already you have recorded in the previous month. So no need to record this again, but the previous bank reconciliation will help you to see that transactions. And also for the audit purpose, if auditor asks you that in this month your bank is showing balance like this and your books of accounts are showing something different, so you need to prove him that what are the investigation you make for this difference in the balances. So you will provide him the bank reconciliation statement, so it will be clear for him. Let's now do some practical on the topic. So at the first step, we need to get the copies of the bank statement and the cash book. So here is our bank statement, and this is our general ledger from our books of account. So one by one we will do matching the transactions. No, the first transaction is here, 6,428, where it is in the bank statement. So this is here. Okay, so these are matching. Then next is 969. So 969 we have also there. This is also the deposit coming to our bank statement. Perfect. Then we have next 2018.24 deposit, but here it is coming 2418.24. it's not matching, leave it. Come to the next. Then we have 1309.76. okay, take this one. This also we have here. So like this you will take all the transactions coming in your general ledger and in the bank statement. So one by one you will take all of these transactions. Okay, now the payment side also you will take it. So all the matching transactions we have take. So after completing this step, now finally we have, you can see that in your bank statement you have two transactions that you could not find in your general ledger, and in your general ledger you have three transactions that you cannot find in your bank statement. So this one, the first one, if you see 2018.24, this is the check number 333 and ADCB and the same date, and here also check number same and the date same for ADCB, and but the amount is different. It means it could be typing error, for bookkeeping error. Okay, by mistake he typed the amount, your accountant typed the amount like 2018 instead of 2418. okay, so now we have find all the discrepancies and errors in our GL. Now we will go and prepare the bank reconciliation statement. So viewers, this is our bank statement format. So here first of all we have balance as per cash book, then we need to add these things and less these things, and then the final balance as per the bank statement. It will come here. The figure we have calculated here, it should match with our bank statement. So first of all we need balance as per the cash book. So what we have in our cash book balance, in our cash book closing balance was 58,447.32. so we will put this balance here, 58,447.32. okay, then we have unpresented checks from the suppliers. Do we have any unpresented checks? This check we have make here, we make the payment here in our general ledger 5,250. okay, but we cannot find this payment from the bank, means till now supplier did not present these checks. So we will go and enter this amount there, 5250. okay, and the deposit less recorded. This is the deposit. In bank statement it is coming 2,418.24, but in our general ledger by mistake we have entered it 2018.24. so 400 dirham less we have recorded. So what we will do, we will enter here the amount what we have recorded less. okay, profit or interest earned from the bank. Do we have anything profit here? No, there is no profit transaction from the bank, so no need to keep it. So this will be the total amount coming 5,650, what we need to add in this our cash book balance. Then we need to less these things, deposits in transit. Let us review. Do we have any deposit in transit? Yes, on 31st March we have make one deposit in our general ledger 2557.07, but this deposit is not coming in our bank statement. It means still it is in process. It will come to first or second, it will come to our bank. So this amount 2557.07, so this amount we need to enter here, 2557.07. then any customer check bounce. Is there any entry in the reconciliation? Did we find anything? Yes, this 2973 we make the deposit, but this check is bounced and we do not record the check bounce entry here. So this is also a reconciliation item. So 2973.55, this amount 2973.55, this we need to deduct from our cash book balance because this check is bounced. Then any bank service charges did we have in the bank statement? Do we have? No. So what is the balance coming here? 58,566.70. Same balance this bank reconciliation statement is calculating for us, 58,566.70. okay, so it means our reconciliation is perfect. It is matching with our bank statement now. Now in the next step we need to record and adjust all the errors and discrepancies other than the unpresented checks from the suppliers and the deposits in transit. Why we will not do anything for these things? Because after first in the next month and within the first week we will receive these payments. So the other things, deposit less recorded, we need to correct it. So what we can do, we can go to the if we have edit option in our accounting software, we will just go and edit that transaction. What we make here 2018.24. so this voucher we will open it and we will change the amount and update the amount after and save it. Or if you do not have any edit option or your company has some restriction on editing the transactions, your software does not allow you, then you can pass another entry with 400 dirham. Like if you have deposited this check from the customer, so what you will do, 400 dirham you will debit your bank and you will credit with 400 dirham to the customer from who you have received this payment, and you will give the description for this voucher that this transaction on this date I have recorded less, so for the correction I make this entry. Okay, so this 400 dirham you will correct it, and the deposit in transit, leave it, and customer check bounce entry. So for the customer check bounce you will go and you will debit your customer and credit the bank with the same amount to record the check bounce entry. Okay, after making all these adjustments, then you need to prepare the adjusted bank reconciliation statement. So it's very simple, the same statement copy here. Okay, it was before adjustment, now make it after adjustment. When you will adjust all the things other than the deposit in transit and the unpresented checks from the suppliers, then your cash balance will not be same like before. Your cash book balance will change. It will be this amount plus 400 minus this check bounce entry. Okay, so your cash balance will be like this, and this one you will remove because this you have already adjusted, this also we have adjusted. So after adjustment, this will be your final bank reconciliation statement. This statement you need to print and keep attach it with your bank statement and your cash book general ledger, and file it it will be used for the next month. When you are going to make next month bank reconciliation statement, there you can see some checks coming to your account and you have no record, you did not record it. So you can see that you have recorded this in the earlier month already as a deposit in transit. So you can find this amount, and the supplier payment also you can find that this check which supplier does not presented in the previous month, it will come in the next month. Okay, so from there you can clear these figures. Now I would like to share with you some unprofessional practices by accountants, what they are doing to match their bank balance with the bank statement. Nowadays everyone has access to internet banking, so it is not like before that you will receive after the end of the month, after 1 week or after 10 days you will receive your bank statement. Immediately after the end of the month on first, you can go to the bank and you just print all the statement and one time sit and post all the transactions for the previous month. And like this some accountants are doing, they are copying the transactions, and then sometimes if they find anything that there was one payment from the supplier, they make it in March, but this is not coming to the March. So what they will do, they will just go and shift that transactions to the next month, go and edit the payment date. And for the customer also, if there is any PDC check coming, so any check they did not receive, means deposit in transit, they recorded and in 31st of March, but it is not coming. So what they will do, they will go just and edit the transaction to 1st of April. Okay, it will come to the next month. So this is not the correct way to do it. Why? Because if you do like this, you are on each month closing, you are preparing the trial balance, you are sending the statement to your customer, or maybe you have sent to the supplier your statement, or customer you have shared the statement already, and you are going and change. So in your statement the customer balance will change, in your supplier balance, in trial balance also your AP and AR balance will change. If you do like this, your bank will be matched perfect, but what about your customer balance, what about your supplier balance? You are changing the things, it's not the correct way. Then posting the transactions into future dates, means accountant what they are doing, if they have received in the month 10 of March, they have received one check from the customer and the check date is for 15 of June and you are in March. So what they will do, instead of receiving that check in the notes receivable or PTC checks, they will go and post that transactions in the 15th of June. So this will be wrong, your customer balance is wrong, they paid you, they give you the check and you are recorded. Then if you will prepare your statement for as of 31st of March, this check will not be there, so your statement is wrong. So that's why also your trial balance is wrong. So that's why you need to record the transaction, you need to maintain notes receivable and payables. This is the next step what I want to tell you, that if you your business is receiving any payments or issuing any checks to the suppliers or receiving any payments from the customers, and this is post dated checks, okay, then you need to maintain the notes payable ledger for the suppliers checks PTCs issued, and notes receivable ledger you need to maintain to record the PTCs received from your customers. Then if sometimes accountants are doing this, they are even maintaining notes payable and notes receivable GL, they are maintaining, but they does not maintain the list of PTCs issued and PTCs received to reconcile with the trial balance. As of 31st March, if your trial balance is showing that you have PTCs from your customer 1,010,000, then you must have a list to reconcile this figure. Okay, from customer A I have 100,000, from customer B I have 55,000, from customer C I have 65,000. So like this you should have a complete list of PTCs with the check number, with the maturity date, to reconcile this with the with your notes payable and notes receivable ledger. So these are the things, means sometimes accountants, they are not maintaining, a lot of companies you can easily find that they are not making bank reconciliation statement. They just go at the end of the month, print the bank statement, and same as per bank statement they will start recording the transactions 1 2 3 4 5. They record everything and their bank and balance is matching and everything. So this is not the way. There will be problems happen, what I have explained you here. Okay, so you need to take care of this. I hope the knowledge we have discussed in this video will add value to your professional skills. If you like this video, please share it with your friends also who are working in accounting profession. Thank you.